Good morning, all. Welcome to the SBI Securities Daily Market Podcast, where we will be discussing views on Nifty, Bank Nifty, USD INR, along with the positioning of FIIs with respect to their open interest data. Now, while on Monday we saw the Nifty index surpassing the 20,000 mark, yesterday's session saw some real brutal selling in terms of mid cap and the small cap space, which corrected over 3 and 4% respectively from higher levels. Now, this was the sharpest one-day fall for both these indices for the year 2023. On the other hand, outperformance was visible in Nifty and Bank Nifty, which ended the session on a flatter note. Remember, in the last few podcasts, friends, we have been emphasizing to book profits in the over leveraged positions in mid cap and the small cap space and shift to large caps. We still feel that this narrative could continue playing out for the next few trading sessions, and not completely saying to avoid mid caps, but one should not chase those mid caps and the small caps where the valuations are stretched beyond imagination. And the issue is also not for those who are holding these good quality mid cap names from lower levels from a long term perspective, but it is especially for those who are trying to attempt to buy fresh at such high exorbitant levels where the risk reward ratio is now quite distorted. So good quality names can still be looked on dips in a staggered manner once this selling pressure subsides in both these mid cap as well as the small cap index. Uh, from the large cap space, we saw action in banking as well as the IT sector, and we expect both these sectors to continue their strong momentum going ahead, and this could support the Nifty levels, Nifty from lower levels. Coming to Nifty levels, important support zone now lies at 19,850, 19,900 zone. Until this support zone holds, we could expect this momentum to continue on the upside up to 20,150, 20,200 levels. Looking at the option chain, highest put writers are now visible in 19,900 as well as 19,800 strikes, while call writing is there in 20,000 as well as 20,100 strikes. This implies a near-term trading range of 19,850 on the downside as well as 20,150, 20,200 on the upside. Coming to Bank Nifty, for the day, from an expiry perspective, we expect the banking index to trade in the range between 45,200 and 45,800 with key support levels around 45,200 and resistance around 45,800. Now, looking at the options data, call writing is visible in 45,500 as well as 45,800 strikes, while put writers are quite active in 45,500 as well as 45,300 strikes. So this brings us to a range of 45,200, 45,250 on the downside as a key support, and 45,800, 45,850 as a key resistance. If we observe the FII data, FIIs have been net sellers in cash to the tune of 1,047 crores, while the DIIs have been net buyers to the tune of 256 crores. Looking at the open interest data of the market participants, FII's long short ratio for index futures have continuously improved to 63%, and that is a positive. FIIs have been once again now buyers in index futures to the tune of 11,077 contracts. They have turned sellers in stock futures to the tune of 9,900 contracts. On the options front, they have bought 3.1 lakh call options and even bought put options to the tune of 3.45 lakhs. So looking at the index futures positioning, it's positive, but on the options front, looks like FIIs are preparing themselves for some higher volatility in the days to come, and since they have bought both the index calls and index puts. Now let's discuss where there could be some interesting opportunities in terms of sectors and stock specific moves. Now, amidst the fall in mid caps, yesterday we saw large caps outperforming, and we expect them to continue their outperformance going ahead too. Last few days we have been bullish on names within the IT space such as TCS, HCL Tech, within the banking such as Axis, ICICI Bank, HDFC Bank, auto names such as Maruti and Bajaj Auto, cement such as Ultratech and Grasim. They have outperformed in the last few sessions, and we expect the outperformance here to continue with the charts setups displaying higher relative strength, and that implies positive momentum going ahead. Coming to USD INR, we expect the pair to trade in a range between 82.75 on the downside and 83.30 on the upside, with immediate supports around 82.85, 82.75 and resistance around 82, 83.20, and beyond 83.20 we expect the pair to move towards 83.35. Now, just to summarize, key support level for Nifty would be 19,850, whereas the resistance would be 20,150. While for the bank Nifty, from an expiry perspective, the key support would be 45,200 and resistance would be 45,800. And we could expect the large caps to continue witnessing an outperformance over mid cap and the small cap indices for the next few sessions. So that's all for today's episode of SBI Securities Daily Market Dose. We hope you enjoyed listening to this podcast and are finding it useful for your trading decisions on a daily basis. Do tune in tomorrow for more market related updates and insights. Until then, happy trading, stay safe. Thank you all.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.